We'll move next to Mr. Vitus Evans, President of the Jamaica Exporters Association, to give his opening remarks.
Thank you, Adrian, and let me thank the rest of the panel, and also the organizers of this event for us to invite presentation. It's been said, and as you said, there's a common theme that's actually been the fundamentals are known for some time, went back to national industrial policy, and exactly where today. So I will not spend too much time dealing with the generalities. Being the president of the Jamaica Exporters Association, I'd like to focus specifically on the export sector and see some of the things that I'd actually like to happen. And in closing, I'd like to actually touch on further on a point that Milton made in terms of where we are with the fundamentals at the macro level, yet we're not seeing the take at the micro level in terms of actually making use of those important achievements that we've actually made at the macro level. As Damien said, I mean, we believe that when it comes to exports, I mean, it has been said over and over that we need to move away from actually believing that we can actually continue to borrow and continue and expect the economy to grow. It has been said over and over again that we need to actually earn our way out of our present predicament. And export growth is one of the major areas to actually achieve that. And to that extent, I mean, we have had on the table for over 2 years now the National Export Strategy that was actually prepared together with the public and private sectors. And all the stakeholders were involved in preparing the export strategy. Yet 2 years on, we're looking at the lack of implementation is actually what is holding us back. We took time to identify 8 sectors of the economy that we believe could have actually provided, had the potential for growth in the short to medium term. We felt that there were some low-hanging fruits that could actually be achieved, and build on those sectors to move on to the other sectors and actually achieve the kind of export growth and by extension, the growth of the economy that we're seeking. But 2 years on, as I said, implementation is no way down the road. And that's one of the reasons why I actually made some comments last week prior to the budget to actually ask the government to show the commitment and demonstrate that commitment in terms of what they do in terms of actually ensuring that we believe that exports has a great potential of actually getting us out of the present predicament. We have identified what needs to be done by the various ministries if we actually go to actually implement successfully the strategy. And we hope that in this budget, that budget allocation will be made to the various ministries to actually ensure that they actually address the issues that we've actually identified within both the sectoral issues that need to be addressed, as well as the specific sectoral issues within the various ministries. The issue of alternative energy, again, we're looking at the efficiencies of our firm. The issue of alternative energy is actually brought up by Bruce and has been over and over, but recently we've actually heard that there's a policy now in place, but we need to see some specific measures that demonstrate that commitment to move to that extent. By now we should be following what happened a lot in Barbados, Eastern Caribbean, where you find that there is tax relief to actually implement a solar system. And we have plenty of we know what's happening, both in terms of solar and wind energy, and I think we need to actually look at those areas. We have a situation where we actually signed the Economic Partnership Agreement, the EPA agreement, back in 2007. And the European Commission has made quite a bit of money available for specific initiatives to actually ensure that we can improve our exports to Europe. That again, we have actually failed on that. There's nothing happening. From the JEA point of view, we've put some specific initiatives on the table. We went as far as actually getting the European Commission to actually consider extending 11 million euros to us to support the project, the program that we had on the table. But again, we had the incursion downtown, and then they saw the need to actually have that funds diverted to other areas. Now, whilst we recognize the need for social intervention, and that certainly must go hand in hand with the economic growth that we're trying to get, but you need to have a balance. You need to ensure that you have the growth that will actually provide you with the kind of financials that will actually able to finance your social program. We also turn to the issue of our competitiveness. Again, I believe when we take a trip to Trinidad with the Minister of Industry, Investment and Commerce just a few weeks ago. And one of the things we went down to Trinidad hoping to actually knock them on the head about was the competitive advantage we felt that they had when it came to energy costs. But they were able to point out that in most of the manufacturing entities, energy formed no more than 4 or 5% of their total manufacturing costs. So that really doesn't give you that great an advantage. And strange enough, Milton, as much as he said that our productivity of our workers have dropped and is low, they felt that that was an area where we had a competitive advantage because they felt that our productivity in Jamaica was higher than theirs in Trinidad. But you could see the level of retooling that takes place. I know there's a lot of questions about the waivers that exist. And tax reform, again, is an area where we are fully committed from the export sector to actually have a comprehensive tax reform package. But whilst we remain uncompetitive as a sector, and the waivers have come in, it is difficult to say that to give up those waivers until you can see a comprehensive tax reform package that will actually address these inefficiencies that exist within the system. I mean, no one likes the fact that subsectors are identified and are given what we call privileges, but that in itself points to the inequality of the tax system that we have in systems, and the fact that that needs to be actually addressed. And again, there's been a lot of discussions on that recently, and we hope that we will see concrete measures to actually get us moving in that direction. I turn finally now the segment to the whole area of the fact that the fundamentals at the macro level are good. I mean, Milton actually reeled it out. I mean, you have a stable exchange rate, inflation is now being stable, you have interest rates coming down, something we've been asking for some time in the productive sector. But we haven't seen the firms that are coming up front to actually say, well, let us actually take advantage of this situation. It may well be a question of confidence, and it may take some time. But my own view, which I want to put on the table for discussion, is something that I've been thinking for some time, is that I believe that we really have to look at the competitiveness of our firms, the individual firms, at the macro level. I believe that we have to see that there must be some structural impediments to our firms that actually make them uncompetitive to go out there. Not just a question of retooling to actually take advantage of the new technology. I believe that starting from the mindset, Milton, but I believe we have to actually break down our firms in compartments and see exactly what is happening from management all the way down, because I believe there is something inherently wrong in terms of the way our firms operate, not only within the climate, but within the structure of the firm itself. And it's something that I've been putting on the table, hoping to get some currency and some traction to see that we have greater discussion around that area if we're to achieve the goals that we do. Thank you.
All right, thank you very much, Mr. Evans. Questions are coming in on the internet or Facebook. Listeners have posted quite a number of questions. The first one that I'm going to take here from Sheldon Gruber. It's actually for Mr. Bowen, the Scotiabank CEO. What are the commercial banks doing to assist in growing the economy? Mr. Bowen?
Sure. I mean, fundamentally, banks are institutions that take deposits from the public and channel them back into investments and into private sector loans. We accomplish that a number of different ways. Some of it is the efficiency that we operate with, which is one of the factors determining the margin between rates paid to attract money and rates lent out. And in order to drive that, efficiency, there's a lot of things that we can be doing. As I said, we've been investing a lot in the systems we're using so that money can more efficiently go out, to make sure our people are properly trained to identify opportunities and get money to the private sector and to consumers. We have to look at the cost of doing business in terms of, as I indicated, reserves. We have to look at our ability to evaluate and properly estimate risk and loss rates. All of those factors that go into determining determining interest rates. So there's often a view that the banks alone determine interest rates, and that's the biggest driver of the take-up of loans in the private sector. And it's certainly, there's certainly some impact we have, but a lot of it is what's the price of alternative investments that are out there for the government, what's the efficiency of the delivery system, what are the loss rates into different sectors of the economy, how predictable are those loss rates, so that in the end the money that we're paying to take in can be lent out and a return can be provided on it. There's a lot of factors there, but the big area that we've been investing in is ensuring that the system, the process of delivering credit to businesses and to consumers isn't efficient.
Right. As well as the fact that there are productive loans that are offered by the bank to various sectors.
Sure. And again, pricing, companies or the country gets lending in a lot of, or gets funds in a lot of different ways. I mean, mortgage rates have been coming down. We currently have a 14% rate. There's 13 to 14% rates in the marketplace. There's small business rates that are out there in the 14 to 15% range. There's auto lending rates that are out at lower rates. There's U.S. dollar export financing rates that are at sub 10% rates. So it's a function of how in each one of those sectors you efficiently deliver credit.
All right. Thank you very much, Mr. Bowen.